Hey guys, hope everything's going well. Alright, I wanted to do this one video on the options market, but before I get into the options market, wanted to take a quick look at this markets. I've been trading stocks the last few years. It would have probably been better if I had just bought and hold from March of last year. And I did start to go long at that moment as well. But anyways, ever since, they're talking about this vaccine rollout, my thought process was, okay, the economy is going to slowly but steadily open up, especially in these blue states here, like in Illinois, California, New York, New Jersey. And, more people will get jobs as a result, or supposedly, as the economy opens up, restaurants open up. And if you look at it from, a fundamental perspective, the Fed funds rate right now is at 0. The 10-year is 1.6, upward sloping yield curve. And I expect it to be upward sloping probably for the next 2, maybe 3 years. And, I have a sports card channel, and, I've been monitoring, the interest rates very closely, especially, the 10-year and also the short-term interest rates as well, because that will have a negative impact if the Fed starts to aggressively raise rates. And that'll probably happen in the next 18 months. But anyways, with the markets, this looks very positive. And I talked about this, a week ago? And my strategy right now is, playing it from the options market. And I want to use, before I get into the options market, just want to leave a disclaimer. If you're investing in options, trading in options, there is definitely risk involved, and you got to know what you're doing. So do your due diligence before, getting or partaking in this. And, with the options market, I'm looking at the XSP, the mini SPX, and I'm looking at the DJX. It's like the Dow Jones CBOE options, and I'll also be looking later on at the mini RUT options that are traded on the CBOE. And what I'm doing is I'm not buying, an in-the-money or a in-the-money option. I'm buying a deep in-the-money option. And a lot of people, when they are involved in the options market and they're buying calls or they're buying puts, the mistake that they make is they're buying options that are, too close to the strike position. And what I've noticed is if you buy a deep in the money call, that's going to expire within a week, then the delta of the option, meaning how should I explain this? So suppose the stock price is at $290, and you buy an option, a call at $285, and you see that the call option, the ask of the option is a 5.15. And it's basically the delta would be close to 1. You want a delta between 0.75 and 1. So going back to that, 5.15 call option. And for every dollar, you're pretty much going to make, 90 cents off of that option. Meaning for $1, you're going to make, if $1 up, the price goes up, you're going to make, $90 about. So that's a delta that I'm looking at. And the thing with these options is if you buy a deep in the money call option, volatility is not too high. And it's not high right now. It's not like at 80 or at 70 or 60. It's in the 20s. And, with low volatility like we're seeing, you could exploit this. you don't have to put that much money down. So suppose you're buying 100 shares of the S&P SPY. You have to put what, 39 grand for that? With some of these options, you know, you could put $700, $800 to control about $39,000. Granted, you won't get a delta of 100, but you may get a delta between 80 and 90. And we're in a bull market right now. And yes, the market's not obviously going to go up in a straight line, you know, but like on a pullback, you know, in my opinion, once again, you could put money into this option. And obviously, you know, I'm not going to go all in, because if there's a correction, you know, you could lose a lot of money. But, you know, you could buy a few contracts, you know, on dips and trade around it. And I think this is the way, you know, if you're not willing to, you know, lose a lot of money just in case the stock market does crash, you know, you're protected, in my opinion, with the call option, where, you know, if the S&P goes down 200 handles for whatever reason, and you have a, what, you put a $600, $700 down for an option, you know, yeah, you're going to lose that money. But, you know, if you were to put down $39,000, you know, you'd lose, what, 2 grand. So, you know, this is what I like about this. In addition, you know, when you're dealing with the CBOE options, the ones with the 1256 tax treatment, what I like about that is it's cash settled. It's like a European type option. It's not like if you're dealing with Apple options, which I am involved with the Apple options. I am at exposure to delivery, you know. Suppose I forget to close the contract, you know, before it expires, you know, I may have to take on that responsibility. Granted, I'm not trading that many Apple options or contracts. It's maybe one. And, you know, I'm always monitoring that, and, you know, I always roll it over. I don't have to worry about, you know, these CBOE specific options. You know, the SXP, the DGAX, and whatnot. And, you know, I don't go all in, because, you know, if the market corrects like it does, you know, I could add a little bit, you know, at the correction. And, you know, I don't know what you guys think. Any options traders out there? I know some people that are options guys, you know, they sell, you know, deep in the money, or deep out of the money calls, deep out of the money puts, you know, and they get that premium, and, you know, they use volatility. You know, the tasty trade guys do that. You know, I like those guys. But, you know, I don't like selling options anymore. I'm more of a buyer of options, puts and calls, but only if they're deep in the money. And a lot of people don't, you know, use this strategy, because they never think, oh, why would I buy deep in the money call, deep in the money put? But from a strategic standpoint, you know, I think you have more bang for the buck than if you were to buy a close in the money or close in the money option, put or call. Anyways, guys, let me know what you think. I'll talk to you later. Bye. And also, if you do like this video, hit the like button, subscribe, and, you know, this helps the algorithm. And, you know, despite all this tech censorship and whatnot, you know, we could get this video, and more people could watch, and more people could comment, whether they agree or disagree. All right, guys, talk to you later. Bye.